The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien, Tommy O'Brien, and Darrell Martin.
Welcome, folks. We appreciate you growling and prowling with us. We get Tommy O'Brien, Darrell Martin, Tom O'Brien. Dow Industrials right now down $1.69. You have the Nasdaq off 49. S&Ps are down 20. Gold's down 580. We get silver off 25 cents. Bonds, you get the 10-year off 11 ticks. The 30 off a full point, 21 ticks. Guys, what's going on, man? It's I have red out here. I don't see any green today. Darrell Martin, what's happening?
I was about to say your bear suit ought to be liking that.
You should see how long my nails are, and they really are long. They grew overnight, man.
Been growing a couple nights, it looks like.
They've been growing a couple nights, it looks like. Yeah, there's no doubt, man. Our phone number, folks, is 877-927-6648. We got King Dollar on the move, top side, 434 ticks. And if you haven't test drove the Nadex platform, folks, great time to do it. Come over to our website at TFNN. You're going to see the banner on the top of the side. You can hit the banner, bring the exchange up. They'll put $25,000 of paper money into your account. You can follow us as we trade these defined option contracts. And, you know, bottom line is that, man, when markets drop out of bed, listen, it's only down to 169, but what's so weird about this is that you're already below, in the first half hour of trading, you're already below July 14th, which in the consolidation we've been in.
Yeah.
Isn't that crazy?
Yeah, definitely.
I mean, that's where, folks, you know, it's like, oh, really? Like, yeah, really. That's, you know, and if we get volume, then you can have a continuation. If we don't get volume, guess what? It's going to bounce again, and you have another chance to short it. So this is going to be a big day out here. That's the bottom line, folks. You know what?
We had some quiet volatility off and on, so this is going to be good.
No, it's you know, it looks to me like the bonds rang the bell, man. And you know, we'll see if in fact the bonds want to continue lower, because over the, you know, you could make an argument over the past 6 years, every time you think bonds are going to go lower, it's just a correction, and then they go higher, and interest rates come down again.
Right.
You know what I mean?
Sure.
So it's you want to keep that in mind, and I think, you know, Tommy and I were talking about this yesterday, Darrell, that I think that the market's going to take a few days to really, like, say, okay, is this really going to happen this time? You know?
Sure.
You know, because what is happening in Europe simultaneously, here, I bring this up, simultaneously, this is a worldwide deal right now, you know, meaning that we're going up. Europe, a couple of these rates went from negative to flat. And that's, you know, psychologically, that's a big thing.
Oh, for sure.
Yeah, you know what I mean? So.
Well, they're only charging them to hold their money there.
Yeah, well, you know, the numbers are pretty big. You know, just coming into work right now, I'm listening to this bond portfolio manager from Invesco, and check this number out. He said that 50% of corporate bonds of sovereign bonds in Europe were at a negative rate. 50%.
Yeah, no, I believe it just because we look at those charts you pull up every day. There's a lot of red in terms of negative.
There is. It's just such a big number, man.
It is, yeah.
You know? So, Darrell Martin, what's been going on? How you doing, man?
Doing well.
Good.
So, yeah, and Felicity's been doing pretty good, too. She won the national championship this past Labor Day weekend.
Congratulations. That's amazing.
Congrats to her.
So, and you know, it was her second year to compete in it. Last year she got fourth place. This year she took the whole thing.
She kicked butt, man.
She did.
Perfect.
That's awesome.
It's a perfect Labor Day, man.
Wow.
Yeah, it was a lot of fun. So it was my birthday weekend, so it was a fun birthday present right there.
Yeah.
Watching her do so well.
Cool, man.
But yeah, so now I'm starting to get back in the swing of things and all that. So just, you know, gotta take care of the health and take care of the kidneys and all that. So,
right, you're gonna be.
It was a calm market, and hopefully you're back right at the right time, man.
Right.
That's what I'm talking about.
Today's a good day to come back.
No
of
kidding.
all the days,
down,
seriously,
like
today.
Deviation moves and everything else.
I bet.
It's fantastic.
I bet.
Well, you know, I mean, the oil and gas, you know, trades, okay, always get intriguing, and and I know you've done this a few times, and the first time I did it was last week, meaning that it lined up that the binaries...
The spreads.
The spreads. No, didn't I buy the binaries on both sides of it?
Did you?
Was it the spreads we bought?
We've been trading the spreads.
Okay.
With the ceiling and the floor.
Ceiling and the floor. Okay, right. Yeah. So the spreads with the ceiling and the floor right before the announcement. Do you know what I'm saying?
Well, the ceiling and the floor is right where it's trading at, whatever the vehicle is, right? And then you're buying the one where you're long, the selling one short,
right?
And
right.
just
like a straddle or whatever.
Exactly.
Yeah.
Exactly.
And
don't knock it out.
Well, it wasn't a huge amount, but it was decent both times.
I think they were both winners marginally.
Marginally. Yeah. Well, the first one, the one last week was a good one. Yesterday was
barely a winner. I think.
But then Tommy...
Barely a winner is at least a winner, right?
Well,
yeah, right. Not losing on that for sure.
And we'll set up... We also set up one on the oil market that I didn't take. That was a monster winner yesterday.
Yeah, and what's going on? Oil came out Thursday at 11 instead of Wednesday at 10:30. And so we were looking at it towards the end of the show, Darrell, and oil was trading... We looked at actually right about 10:30, 10:35, after natural gas had come out. We just kind of pivoted and said, okay, now let's take a look at oil. And oil was trading right at $46, like literally right on the dot. And so it was perfect that when we checked around, of course, there were different strikes, but when we pulled up the 230 strikes, there were $5 spreads from 46 to 51 and from 46 to 41. And we'll go over, but oil moved $1.75
exactly
from that $46, and so
and it only had to move 67 cents.
65, for the two contracts.
You stay right there, folks. Tommy, Darrell, myself, we're coming right back. Dow right now is down to $1.47. Nasdaq's up 45.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Our phone number is 877-927-6648. And if you haven't test drove the Nadex platform, great time to do it. What we're going to do right now is just go over this oil trade from yesterday.
People were watching us yesterday, right? They remember it. And Darrell, so we were saying oil was trading at $46. We have the chart up. It was about $10.35 or so. And it was perfect because there were two spreads that were right where the ceiling and the floor were 46, and they were actually the $5 spreads all the way till 2:30. And so just looking at it, if people had done it, it was basically you were paying about 30 to 35 cents, which is dollars of premium on either side.
Right.
Because oil's at 46. There's basically no value in either spread, right? Because if it expires at 46, each one's kind of worthless.
Yes.
That's your max loss. On each one had about 35 cents in premium. So you needed like 65 cents in either direction away from 46 for break even. And, oil just shot up to, by the end of the day, it was at 47.75, I believe. And that's, you had the 230, 47.74. So $175, $174 for your 65 total.
Yeah.
So that's a sweet trade for anybody that was following it.
Huge.
Yeah.
When those babies are lined up, man.
So we like those trades now, Darrell.
Yeah, that's the story.
Don't we all? You know?
Seriously, man.
And especially because, like you were saying, the inventory report's about to come out at 11 o'clock, right? And we talked about how you have $5 of profit potential or value potential. And we said specifically, maybe you'll get $1.50.
Right.
Right? But guess what? You're not really paying for that third, fourth, and fifth dollar in terms of premium. You're paying so little for that premium because it's such an unlikely event.
Right.
As we saw even yesterday, you only got $1.75. But guess what? Those days are going to come every so often.
And that extra 25 cents is a lot.
It is.
Really.
Especially when you're only putting up $65, which is 65 cents in oil for the whole, both contracts.
Pretty wild. Let's go to Tom in Plymouth. Hey, Tom, what's going on, brother?
Hey, good morning, Tom. Tommy, Darrell.
Morning, Tom.
How you doing, man?
Darrell. I'm doing fantastic now.
Yeah, I'm surprised you're calling me back. I'm not kidding. So check this out. This is wicked, folks, okay? So Tom got gold all the way down with the JDST, right?
Okay.
Got it good, right? I mean, big time. He calls up, and he has the USLV. Okay, you got to check this out. So he has
and when is this? Just
thank you. Okay, so the USLV is.
You said he calls up. When just like last night or last week?
No.
Sorry, that's a.
Okay, the USLV is the 3 times long silver, right? And he calls up, folks, and he calls up right here.
Okay.
No, on September 1st. And I'm saying, and I said, I don't like that trade, man. You better close that thing, right? Bottom line, he had this thing nailed. And so this, Tom, so check this out. This is, it's good and it's sad, right? So you got to picture something, folks. What happens is that, when everyone calls, the aspect of where people are, and because we're in the market so much, I kind of know where most people are positioned, including myself. And so I'm on the last couple of days I've been thinking of you. I says, he's going to kill me, man. I don't blame him. I mean, and I know you weren't going to kill me. But no, I know you're not going to kill me, but it was such a beautiful trade. And listen, you never can get like the tops and the bottoms, but you actually got it. And so this morning, I'm on the computer early, and I'm saying, he's going to call today because we finally get it cracked. That's wicked, isn't it, man? Oh.
It is.
I'm sorry, man.
You can't predict everything.
No, I know that. But you had that so nailed. You had it so nailed, man. Okay, you really.
I kept some of it.
Good for you.
I kept some of it. I got rid of some of it. I kept some of it. I'm making money. So
I know, but I had to tell the story because all I've been thinking about is last 5 days saying, man, he got that just perfect. And that's so unusual. I mean, just for anyone. Do you know what I mean?
I told you I was tired. I was going to take a little rest. You said I couldn't rest, and so I took a little heat Tuesday and Wednesday. It was okay. I said,
I get it. I'm there, and I've been there 1,000 times. I know. I know.
I was doing the leverage down thing, and I know that's dangerous, but But now I'm loaded with JDST. And I'm wondering,
now you're making money hand over fist again. Okay, so let's now this is okay. So this is going to get interesting, folks, and this is what it is, right? So the JDST is the direction of 300% bear of the junior gold miners. Okay, so this is a leverage position. It's a position where up a buck.
Wow.
We're up $1.95 right now. You're at 23.59. Now I'm going to go to the JDX first. GDXJ. GDXJ. That's GDXJ, which it trades off. Okay, because I want to show you something here, and this is where it's going to get really intriguing as to is this going to be a large ABC down, or are we just going to go to the bottom? So that's down $1.40, and what we've had thus far is this. We haven't had enough volume as we're coming down. So I suspect what we're going to have is that the bearish part of the GDXJ is that it didn't get to a swing point just as the gold contract didn't. The bullish part would be that, we're pulling back with light volume. Now, when you normally do that, I suspect this will go to the bottom, but we'll see how it hits that bottom. And if it hits the bottom with light volume, then we get a consolidation in place. So it's going to be kind of up in the air. The way that a few of the larger equities, well, in this case, you'd have to look at the smaller equities, but if I just change gears on you for a second and go to the GDX, inside the GDX, Barrick Gold is the largest weighting, and, Barrick couldn't handle price at all. That looks like it's going to be one of the first ones back there, as is Newmont. So in that aspect, I think you get some real action with the JDST.
Yep.
And
I've got a little bit of the dust too. Not as much. So.
Yeah, and in both cases, there's real good action. The dust is the direction 300% bear position of the New York Archer, which is the GDX. Okay. And that's the same type of setup. If you take a look at this, what you're going to see is today we got 18.2 million. It has the volume today. We'll see whether it keeps it up. If it does,
is young, though.
if it does 100 million, you got action. Now that's on the daily. On the weeklies, it looks like they're big ABC downs. That's the other side of it. If this GDX closes under 27.52, you get action, man. And if they let me go to GDXJ. Put this on a weekly. Yeah, this is action too, man. This is pretty intense, actually. If this closes under 46, actually, it has to close under 46.33.
We start zeroing in about 3:30, 3:15, 3:30 this afternoon.
No, it's big time. We know Fridays, Fridays in the metal market, folks, can have some heavy swings, And these bonds are saying, guess what? At least we're in a correction. We'll find out if, in fact, the bell was rung. You know what I mean? Cooking, brother.
Thank you, gentlemen. You guys have a great weekend.
You too.
You too, Tom.
You stay right there, folks. Darrell, Tommy, myself, we're coming right back. Dow's off 164, Nasdaq's off 45, S&Ps are off 19. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 167. You get the NASDAQ off 45. S&Ps are down 20. That's a big move by the S&Ps, man.
Yes.
You know?
Yes.
And, folks, you know, if you haven't test drove the Nadex platform, great time to do it. Now, as you're over at TFNN, you can also test drive Darrell's scanner. Darrell, tell the folks how this scanner works.
Scanner is basically made to make it really simple to find whatever contracts you want. You can go in and you can look at multiple instruments, like just the specific ones you want, and you can do instant one-click trading versus having to open a ticket and go through the whole process.
Yes.
You can see the risk reward without having to close it, so it makes it easy to look at multiple time frames at the exact same time. Also, you can measure by proximity and premium, which to me are two of the most important and valuable things that I use on the scanner.
Sure, there's no doubt.
So. And if you look at, say NASDAQ, I'll pop NASDAQ open right here. And, a little rollover reminder. It also keeps you up to date on your contracts there on futures, especially for people that aren't used to that. But, I can go in here and it tells me, hey, this one, on these contracts, this is 26 ticks away from where the market's at.
Okay.
So don't expect, it may only have a $2, or $5, $6 risk, but it has to move.
Right.
Quite a bit, like 5-6 points before I'm going to make anything.
Exactly.
So whereas I go down here and see, hey, 2 risks, 7 risk, this may, mirror the market a lot more. If I want to go short, that might be my better contract.
Right.
That type of thing. So and I can see that all the way down. Plus I can see if premium's time on my side or is time against me.
Yeah.
And that's what premium does. It basically says, if the market didn't move at all between you entering and it expiring, how much would you make or lose?
Right.
That's the simplest way I can define premium. And it's because it's already that far above or that far below the market. So, if I sell it and I'm selling it, 36 ticks above the market, it's like, hey, you're going to make this much money. You know, you're going to, in this case, you're going to make $90. You know, if you sold this and just left it alone, and the market didn't do anything.
Right.
So, you know, can you start off with time in your favor? Yes, there are plenty of contracts to do that on, but you also can start off with, if the market didn't move, you'd lose $87. Period. So, you know, so just knowing those two things, I think, are probably the most crucial pieces of the scanner. Is how far away is the market from where the bid and offer of the contract are right now, and the other thing is time against me or for me on this trade.
And you know it's cool, folks. Okay, if you take that aspect, then you take the deviation levels, right?
Exactly.
And what would happen, folks, is that when you get a big move, so picture that you have the big move, and it comes up to a deviation level, then you take a look at that and say, okay, where am I set up? Should I close the trade? Are they giving us a lot of premium? You know, because that's when the fear does come in the marketplace. So you could basically do another probability there at those points, and we start forming those. You know, we're in a market right now that hasn't been that volatile. You know, and when they hit these deviation points, most times, you know, you get a turn in the market. Doesn't mean that it has to happen, but that's always a nice...
Even looking at NASDAQ right now, I mean, it's just bounced between 0.5 and 0.7, 0.5 and 0.7 right now.
And and that's a good... let me see where so how much has the NASDAQ actually moved right now? So...
I think they're all pretty close percentage-wise, yeah.
Yeah, okay, so it's only 0.8% so far. So the S&P is the one that's getting hit. Oh, that's pretty cool. Right, okay.
So, but seeing that it's bouncing between those levels, it's like, okay, well, at this moment, I'm not expecting a massive move.
Yes.
But if I'm trading the NASDAQ, then I know, hey, I'm not expecting a massive move. I probably want a contract that's really close in proximity.
Yeah.
You know, or that time is on my side.
Right.
So, or both, right? So that way, you know, if it's moving really slow and it's just bouncing between those levels, I could make money just on time or just on that small amount of movement. If I get one that's really far away from where the market is and time's against me, then time's against me, movement's against me. I mean, I'm really setting myself up for a bad trade. And a lot of the people that I've talked to, you know, like when we go to the expos, you know, we'll go to Vegas here coming up here in a couple months. And, you know, and I talked to them about spreads. And once I show them proximity and premium, it's like the whole world changes.
Right.
Because they were trading it and they weren't doing well. They weren't successful at trading it. And they didn't understand that they were just choosing the wrong spread.
Right.
And, you know, it's not that it's a hard thing. It's that somebody has to show you.
Yes.
And once you learn it, it's like, oh, wow. Okay, yeah, it makes sense. I'm buying it like 20 ticks above the market. Well, then obviously the market has to come up 20 ticks to even be break even.
Yeah.
You know, and so, but without having to do all that math, the scanner's doing the math for you. And that's why I made the scanner originally. When I had, you know, we went through several iterations of the scanner over the years, and I made it just because I love the spreads, but I hated doing all the math. I mean, I want to look at my chart and focus on the chart and let the math be like there for me.
No doubt.
So
cool, man. Yeah. Let's go over to Steve in Nashville. Hey, Steve, what's going on?
Hey, Steve.
Hey, it's McDonald's Steve today.
McDonald's?
Is that a Friday McDonald's run?
You're a trader.
Any size coffee is $1.09.
There you go. See, there's always that's value, man.
Wow.
That's value. There you go.
So all day, every day. Yeah, no, I'm not in Nashville, so but I did have a question for you. Early on, you started talking about bonds, I think, Tom.
Yes.
You guys, and just in general, I guess my wife has a bond fund in her 401k.
Okay.
And look, if it's your typical bond fund, I can't tell you which one it is. I forget.
Right.
But should it be time to maybe look at scaling that back?
Yes.
I guess is what the question is.
This is what happens, unfortunately, is that if you just own bonds, folks, and you actually own them and you keep them to expiration, I just keep them, no problem whatsoever, right? Because what happens there is that you bought whether it's a 2-year note, a 5-year note, a 10-year note, or a 30-year bond, right? You're going to get paid your interest and you paid your principal back. Now, that being said, what happens with bond funds is totally different. With bond funds, unfortunately, the fund managers, right? Now, let's just go look at. I'll show you how this shakes out because this is where this gets dangerous. We take the bond. I take the 30-year, and if you know, I'm going to take the highs, okay? But guess what? as the bond fund is buying the 30-year bonds in July, they're paying $176 for a $100 bond. That's when you're reading bonds, folks, that's what that means. 168, okay? So what happens is this, is that they turn, not on purpose, okay, that's just how these funds work, they have to turn these over, and they get destroyed. Because, you know, if like anything else, if you hold it, you know, to the end, well, guess what? You're going to get your full principal. What the problem is here is that they've paid over the principal cost, and that when the interest rates go up, bonds get hit very quick because the people that are in bonds, they want to buy new ones because the Treasury's going to sell bonds next week. So it's like, why am I going to pay that when I'm going to get a little bit more and I'm only going to pay 100 cents on the dollar?
Okay, that actually was my question. What in general was the catalyst? Like bonds have been going up, right?
Yes.
Until just I don't know, a week or two ago. So it's the threat of the rate increase that
it is.
Now all of a sudden
it is. Okay, and you know, as I said to Tommy a little bit earlier, I would get defensive, but I said to Tommy a little bit earlier, listen, they've corrected a few times and the last 3 or 4 years, and guess what? Then they go higher again and lower interest rates. But you know, you just I'd stay defensive. That's for sure.
Right. Okay, great.
Yes.
Yeah, that was my question.
Stay right there. We'll come right back.
By the way, Darrell.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Dow Industrials right now down 186. You get the Nasdaq down 53. The S&Ps are down 23. And guess what, folks? You get volume behind the move. I mean, big volume too. It's pretty amazing. So right now on the SPY, you've already done 48 million shares. We hit a high with 76 million. So that's some real juice. You keep that up, you'll get some follow through on Monday. On the Qs, same situation. The Qs are 11.7 million already, and they made a high on Tuesday with 17 million. So we got juice on the way down. Let's go to Jim in Oldsmar. Hey, Jim, what's going on?
Hey, appreciate you guys taking the call. How y'all today?
Morning, Jim.
We appreciate you growling and prowling with us out here.
I had a question about GE. If you think it'll hold at the 200-day moving average, or you think it might go down to like 2040 or so?
Well, GE is a confirmed ABC structure on the way down. It took out its B point. It took it out on the 6th. So I think it was 2 points. Let me just see. $33.31. Yeah, so it's $2, which gets you $29.57 right now. That's your first price projection. I suspect it's going to get down to the high volume swing low out here at $29.17. Where's the 200? Okay. Let me just look at this. What you're looking at? Oh, yeah, it looks like to me it's going to break the 200 because it's right at it right now.
Okay.
Are you looking to buy it or sell it?
I'm looking to buy it.
Okay, so just keep your hands in your pocket for a bit, maybe for about 4 or 5 weeks.
Okay. I appreciate you guys. I just love listening to Tiger TV and all the great shows and things y'all do out there, and I really appreciate the education that you put forth because I'm still a novice at all this. So.
Well, we appreciate you growling and prowling with us. And what's so cool, folks, is that in the marketplace, we're all novices. Every day we learn, that's why so many people love the market, man. You know what I mean? It's one of those deals that are dynamic, that change all the time. So thanks so much, brother.
Thank you.
Have a great one, man. Have a safe one. Let's go to Paul in San Jose. Hey, Paul, what's going on? He's up early. What's
happening, guys?
How you doing, man?
Happening, Paul?
You're up early. You're growling and prowling early, man.
Hey, I'm growling and prowling at 5 a.m.
I know. And then you guys can go out boating or golf or do whatever you wanted. What, one, all right? Yeah.
I heard that, man. Hey, just before, I have a question about Ren, but just before that, I remember on this very show, when I first started listening to you guys back in around January, February, when it looked like the market was just falling apart, Tom, I remember you saying the most deviant thing the market can do is go up and spike the high. And it took a while, but here we are, and I think that we're coming down the other side of that mountain now. So congratulations, man. That was an awesome call.
Well, I appreciate it. And it's the market's so deviant, it's sick. It really is. What we have now is this, and this is a big heads up, okay? The August of 2015 swing lows, folks. A few of the very large cap stocks have already hit that level, and if that's where we're going, that's a big hit, man. That's and that's a high volume swing low. My take is that we will get there. The question is, is this where it's going to go now? Because we've been in this consolidation. So check this out. This is what's, I'll put this up on a weekly for a second because you're going to see how clean this is. It's pretty clean, meaning the consolidation that we're in, started in really November of 2014. Now the SPX, we're at 2158. If we get back inside 2134, that puts game on that the bottom of this is running out at 1820 because all these big volume days and weeks are all high volume and all the highs have light volume. First you have to get back inside the range, but we'll see where it shakes out. But my take is that that's what we're going to have. And this is the perfect type of setup, meaning for some reason that September is always a tough month. In this case, we get the Fed going on the same time. It's like, there's enough volatility there. So we'll see how it shakes out in the next 6 weeks.
Yeah, we'll see how it all works out. So I want to take a look at REN, R-E-N. I remember, I don't know if you remember, I called you a couple of weeks ago looking at this equity, and I started trading this thing back in July when it first popped up with that massive volume around $5. And Tom, I want to short this thing. What do you think, man? The volume looks scary to short it, but it looks so overextended.
You got a 12% short position too, which is scary. You know, anything over like 10%, even 8% is. You know, this equity, I can see what he's doing, folks, because it just went from $2.80 July 7th, and you're trading at $22, which is pretty intense. So what's moving this thing? What did they do? Is there anything they did, or are they just pumping it?
I don't know. I only do technical, so I just see it popping up with volume. I don't even know what the company does. It has liquidity, and so I trade it. But it looks like it did an ABC up and then almost did another one right on top of it without even any hesitation.
And that's I agree, but I wouldn't short it. Okay. You're in a market right now. So the way this market is set up right now, folks, is that it looks to me like you're gonna have a big down day here. And if you're not short the market, what will end up happening, we'll end up with a bounce. We'll get a bounce, and that's where you want to go short. But that's kind of, and there'll be, if this is the real downdraft, there's going to be a lot of sectors that you can short because we're so extended, and because of the fact that we haven't had a sell-off in a long period of time.
Yeah, it's going to be intense. The volume on that SPY just keeps going up and up and up.
Oh, this is going to be a big day. This is a big day, and this is the real danger. So you have that aspect. If you go look at the Nasdaq, folks, the Nasdaq could be a monster island top, and that would be really dangerous. We already gapped away once, and I can actually make the case it already is. Let's see, 116.13. Yeah, you have an island is set up from the August 5th level to today, and islands, never mind, normally in an island top with council charting, candlestick charting, folks, okay, even if you trade up there 3 or 4 days, it's bearish. We're talking about being up there a full month, So, and what that means is that you have traders, investors that are above the market and they never had a chance to get out. They have a chance, of course, but when you just gap lower, it's like, oh, what just happened? You wake up in the morning and it's like, oh, no. So all those folks will get out of the marketplace.
All right, we'll see how this shakes out. You guys have a great weekend.
You too, man.
Thanks, Paul. You too.
All right. Have a great one. Have a safe one. Hey, Darrell, so, this weather, did you guys get a lot of rain, too, in Dallas, or was it just us and going up the coast?
Oh, no, we've been getting it like crazy out here.
So you did, too? Okay.
I haven't watered my lawn for like 3 years, I think. We keep getting so much rain.
Wow.
But, yeah, being in Texas, we're getting plenty of it. But, we're getting plenty of rain. So, hadn't messed anything up yet so far, really, for us.
That's good,
rodeo, so,
Poor people in Louisiana, man. They're getting killed.
Oh, my goodness.
Yeah.
It's horrible out there.
It is. You stay right there, folks. Darrell, Tommy, myself, we're coming right back. And, of course, our man, Mr. Basil Chapman's going to be coming up at 11 o'clock. We have swim lessons at 12, Steve Rhodes at 1, Dave White at 2, and I'll be back this afternoon. Stay right there, folks. Tommy, Darrell, myself, we're coming right back. Dow's off of $1.95.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. So we have the Dow off 193. You get the Nasdaq down 58. S&Ps are off 23. Percentage-wise, this is what we have out here. You have the Dow down 1%. The S&Ps are down 1.2. Nasdaq is down 1.1. And the indice volume out here, look at that. This is interesting. So the indice volume is still light. We only have 255 million inside the NYSE. Nasdaq's not going to be light. Yeah, Nasdaq's still saying it's light for this time of day. It's pretty strange, though. I suspect that's going to go up. We're at 610 million because when we take a look at the NDX of the three Qs, the Qs are at 12.9 million already. Mm-hmm. And this is going to. It looks
it's now
like
at 13 within that second.
Look at that fast. So, yeah, it's going to, we're only an hour and a half into it. This is going to break the lowest swing point with volume. 20 million. It only has to do 7 more million. And it would break a lowest swing with volume. If we go over to the SPY, the SPY's at 52 million. Look at that. It's coming into 97. And that's going to break it with volume, too. The bottom line is they're going to close under $216.03. So that's a heads up. And, when you come down this fast, folks, the SPY in general, probably will try to get all the way back, which would be pretty intense, right to the 212 level. And we'll see whether it can get back inside that lower range. That's going to be some big action, man. And if you haven't test drove the Nadex platform, folks, great time to do it. You can practice it over the weekend. Of course, we have the, this Darrell, Tommy, myself every Monday, every Friday, and of course on Monday you got the weeklies that come into effect.
Yeah, we like those weekly binaries, checking out what kind of premiums in the market, and we'll see how today ends up, because if things escalate, right, then there'll be some premium in those Monday weekly binaries. There'll be premium in everything next week if things continue to escalate, for sure.
And this is let's see if we look across. Yeah, Europe's not down that bad. The FTSE's down 1.3% right now. The DAX is off 1. Asia didn't get hit last night. Well, it was flat. Let's put it that way. It's not down 0.5% or something. Nothing really heavy. The thing that keep your eyes on here are these bonds. And we'll see whether this is just a correction in a market that does want to move higher, or in fact, did it ring the bell?
Oil too. I was watching oil. It's just amazing. We went from that 46 price all the way up to 47.75 almost yesterday for the close, and it's almost retreated completely.
That's crazy.
Yeah, off of those inventory numbers yesterday.
Right. So now we're right back to 46.35. That might set up as a nice trade. We got. Yeah, because what's going to happen, if this dollar continues higher, it's going to be hard for oil to continue higher. But if, in fact, it does, that also would basically set up saying, hey, these economies are still going because we're buying oil.
Sure.
Andy Hecht was talking about, he was liking the copper trade out here.
Okay.
And what's intriguing there is that, I like it too. And it's like, if copper starts moving higher, folks, what that is saying is that, bottom line, someone's buying copper. Copper is a good indication that the economies are moving forward. And that would go along with the aspect that the Fed can go up on rates, the ECB can not go down on rates, and that would also throw some nice volatility inside these markets.
If everything's great, doesn't it mean the market's going down, 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 though?
Yeah.
Right?
Yeah, that's what's so crazy. That's what's so crazy. I know.
So wonderful it drops.
Right, Darrell, great to have you back, man. Have a great weekend, safe weekend. Folks, you stay right there. We're actually going to be playing Larry, and then swim lessons. Thanks, pal.
Thanks, man.
Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.